Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from the TechnicalTraders.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
Oil, even though there's sanctions and so-called shortages and stuff, the price has come down a bit, but do you see it falling much further?
Yeah, oil had kind of that big blow-off phase. When war hit, we saw oil jump from about, $90 a barrel up to about almost $130 a barrel. And typically when you get a big move like that, it can do some damage to the charts, to the price. And we did see huge volume move in. Everybody chased crude oil higher, and now it's back down, trading down around 94. I do think it's going to continue to struggle and flounder. We're seeing a lot of heavy volume, big selling going on in oil. I do think commodities in general are going to stay fairly elevated for potentially a year or two, but I do think there's some potential downside here in crude. It's kind of slowly drifting lower. There's just a lot of unwinding of everybody who paid a premium when they got into oil, chasing the price higher. They're slowly giving up on it, and that creates kind of a slow, steady stream of selling, and that's what the pattern we've seen over the past 2.5 weeks with crude is just kind of a sideways drift lower and lower, and that's just because there was so much buying volume during that upward streak where they all paid $110 to $130 a barrel. They're just moving out of it. They want to get out of it. It feels like dead money, and so it just creates this kind of never-ending trickle stream of selling that pulls the price down. But I think there's some room to go back down to the $90. It's at about $94.80 right now. But it should find support. I think it's going to still flounder between the $90 and the $110 range, for a while. Potentially even go back up to test those old highs of 130. So, short term, a little bit bearish still.
Sure. In Vancouver, where we have the highest gasoline prices in North America, thanks to the high tax regime of the local governments. I think we pay about 18.5 cents a liter just to the transit authority. So we were paying $2.14 a liter, some places more than that, which translates to well over $8 a gallon per U.S. gallon if you're paying Canadian dollars. Just so people listening outside of Canada can get a little perspective on it. When you're paying over $8 a gallon, you're paying a bit for gasoline. Now,
I've talked to a bunch of different workers and at the ski resort, and a lot of them commute to work, and they're like, this fuel price is killing them. A lot of them drive big trucks, and they're getting minimum wage more or less. And it's borderline whether it's worth working or not. By the end of the day in food, you don't really make anything. It'd be all because of fuel, and some of them, it is pretty wild.
Yeah, and of course, fuel prices translate into other things. My wife just bought a bunch of grapes. I really like organic grapes, and they were that was $11.50 for a bunch of grapes. Yeah,
crazy.
I can't imagine. I used to eat avocados a lot too, and apparently AirPods for your ears are cheaper than avocados. Right now, commodity prices. And talking about that, do you look at agricultural commodities and investments there?
Yeah, I mean, there's a good way to look at the agricultural side of things, which there's an ETF called, the symbol is DBA, and that's the agricultural ETF. And, it's been up and to the right for a long time. We kind of had the war blip where commodities in general popped up, but it has a very strong pattern here that looks like it's going to want to continue to rally and take off. And one of my subscribers was talking about the agricultural complex in good detail in our members area with other members, and he touched on some really interesting points, which I don't know the great details of it, but he was talking about how we're not going to see the agricultural crunch and some real issues until the very end of this summer. And he's like, what he painted was a pretty scary picture. So, I mean, we're in this phase here where I think commodity pricing is going to continue to move higher, and it could really hit everyone at the pumps. It's going to hit everyone at the groceries, the grocery bills, and we might only be at the halfway mark here. All this big rally we've seen over the past year in commodities, we could see another huge expansion phase, and that could definitely trigger weak times for the economy. Once things get overpriced, I mean, people cut back on spending, and once they cut back on spending, I mean, everything is downhill from there. Economy slides, stock market will slide. People bunker down. So it's the agricultural is a big concern about going higher and definitely changing the economy here.
Yeah, and a constant, you can perhaps not drive your cars much or your big SUV, but your family has to eat no matter what.
Yep. It's a fixed living expense.
and this whole thing too, I know, push to get people onto transit. You take a look at how big Canada is. If you're not in a major urban center, you have to drive. There is no transit.
Yeah, there's no transit in most places. It's very minimal. Yeah. Yeah,
and once you get out of Vancouver proper in the Lower Mainland, there's some SkyTrain, but it doesn't go far enough, and the buses are few and infrequent. And I mean, friends of mine told me about their 2.5-hour commutes to work by bus every morning. I'm going, holy cow! And you're here at 8 o'clock in the morning.
Yeah. It'll
so,
be a life changer to take public transit, where you got to go early, make sure you don't miss the bus, wait for the bus, get on the bus, do the stops, get off, walk to work. I mean, oh my gosh.
Yeah.
It's not my cup of tea.
I've been lucky in Vancouver that everywhere I've lived, I've been right close to a rapid transit station, a 5 to 15 minute walk away. So I've been blessed that way. I mean, partly planned, but also lucky where you find the property you want, and rapid transit is there. And gosh, years ago I switched to rapid transit because I couldn't afford the parking fees, because Vancouver has tremendous taxes on anything related to cars. The city of Vancouver has officially declared war on the car quite some time ago. So forget about trying to drive in downtown. It's all bike lanes. You can take 45 minutes to go 3 blocks. Because all the lights and signals are for bikes, even pedestrians. The first things that get plowed in Vancouver after our rare snowstorms are the bike lanes, not the sidewalks, not the roads, but the bike lanes get priority.
Interesting, yeah.
Yeah. So, I mean, there's nothing wrong with riding bikes, but when you're an old age pensioner like me, it's not always an alternative. And Vancouver also forgets, well, before the pandemic, 600,000 people a day commuted into Vancouver to work. But they want you to ride a bicycle 45, 60 miles or 100 kilometers to into work and out every day. That's the attitude of the city of Vancouver. They think like a little village instead of a big metropolis. It's an interesting phenomena there, where most of our politicians live within walking or biking distance of Vancouver City Hall. And they think everybody lives like that. Well, we can't all afford, the the $5 million homes that you'd find around Vancouver City Hall. Anyway, moving on to natural gas. Is that much of a commodity right now? Again, with Europe experiencing shortages and potential shortages because they rely on Russia.
Yeah, I mean, we've seen a huge, natural gas is kind of one of the leading kind of plays right now. I mean, it's just been a rocket ship going back up. We're right back up to those kind of October and November highs that we saw last year. And so this is a big question. Are we coming back up to a major double top here? Maybe we're going to form a big cup and handle, meaning we had the October highs, the market corrected. It's come back up to those highs now, and usually when you get to a major previous high like this, you'll see price chop sideways for a little while. And that sideways kind of bull flag pattern, when you actually tie that into the previous high in October, it creates a cup, and then you got that flag, that sideways move as a handle, and that is actually seen as a very bullish pattern. And there's potential that natural gas could go absolutely ballistic in price. We've seen it before go up into the 12, 14, almost $16 range. Right now we're only at $6. So there's a lot of upside potential that if this was to break out here, we would probably see $10 or $12 natural gas, a double from this level. So we're at a pretty major pivot point. We haven't seen those prices since back in 2005 and 2008. We saw those. So it's a pretty nerve-wracking of where these prices are going. And I know, over in the UK, the price that they have to pay for natural gas is just crazy. And with Russia potentially not going to provide it and all these sanctions and stuff, it's going to put a huge strain on the supply demand for natural gas. So I think we could see the energies continue to spike, especially natural gas. It's one of those things that can just pop and take off, and it could double from where we are. And in a way, these high commodity prices are going to, I think, benefit other sectors, because when energies get that high, we're going to start looking for the clean energy side of things. The expensive kind of clean energy now starts to look a lot more attractive, and it's renewable, so it's worth the investment. So we have been seeing certain sectors like the solar and the wind energy sectors hold up fairly well. They're actually tracking very similar to energy stocks in terms of if oil goes up in it, then we see the clean energy ETFs move up as well, because as oil's not favorable, clean energy becomes more favorable. So this energy spike could be a very good thing for the clean energy industry.
Yes, I know environmentalists say that natural gas isn't that clean. It's not that it's a dirty burning fuel. It's not. But that there's all these methane leaks at the production facilities, the pipelines, and so on. But I just saw a recent article, it might have been Bloomberg, I can't say that for sure, that satellites can detect those methane leaks, and they're all in Russia and Saudi Arabia. They don't care about leaks and the environment in those places. Canadians do, and also I think because it's a precious resource, you don't want to waste any of it. You want to make sure it all gets to market. You don't want half of it to escape on the way there. So in Russia, there's nothing but methane plumes all over the place. So again, Canadian industry getting painted with a black brush because of what other people are doing in other countries where they don't care about the environment.
Yeah, my friend works on the pipelines for gas and oil, and it's crazy how strict and how well the Canadian system is for that. I mean, it's unbelievable. And so, there's no way it should be getting a bad rep because they do. There's always going to be the odd issue. You can't get around that. But Canada's got a pretty good system, I think, when it comes to the pipelines and things like that versus other countries. So it's when you're running huge pressures and vacuum pumps and other pumps, it's amazing how much energy you waste when there's a leak. If there's a leak in a line, man, the amount of wasted energy just because of that is huge as well. So it's pretty important to have a solid system.
Yeah, and when they call it natural gas, there's a reason. In my hometown of Peace River, Alberta, which is 500 kilometers, 300 miles north of Edmonton. So it's north. About 12 miles, or about 15 clicks north of Peace River, there's a sandbar where natural gas has leaked forever. It just comes up out of the ground. There were jet boat tours you could take up there. They would throw a highway flare on the sandbar and it would burst into flames and there'd be a nice little jet of flame coming up. The native people there worship that particular island because of its strange properties, because sometimes it would just burst into flames all by itself. So natural gas can escape naturally into the atmosphere, in certain places. That's why they call it natural gas, I guess. We'll be back with Chris Vermeulen right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, in times of conflict, gold has always been the fallback place for security. Has gold really taken off with the conflict between Russia and Ukraine?
Yeah, gold had definitely a strong surge. It was already starting to rally before that happened, which could have been some foreshadowing or some everybody starting to move in thinking war was going to happen. But once the war was introduced, pretty much all commodities, including gold, had a big, strong pop. But it has come pretty much back down to where it was before the war. It's been trading sideways in a kind of a pennant or a flag formation. We need to see where this is going to go. I think precious metals have a very positive outlook going forward. It's seen as a global defensive play, more so gold than silver. And I think we're going to continue to see this move higher because we're in a commodity-driven market right now. We are already in one well before the war. Commodities have been doing exceptionally well. The commodity complex or ETFs have been moving up. But now we're in this late stages where I think the stock market is very close to the end of moving higher. We're going to enter into a stage 4 decline, which is a bear market. And when that happens, when we're in this late stage of the stock market cycle, this is when precious metals and mining stocks usually come to life. And they have come to life in the last couple of months. They're actually some of the top leading sectors right now, is the miners. And really everything's just been consolidating, coiling, digesting that war news. And I think things are going to resolve to the upside, meaning gold, silver, and miners, and probably other commodities and energies are going to start another rally here. The question is it going to take a couple more weeks or a couple more months? But overall, the patterns have turned a corner where gold, silver, and miners are primed and ready to start a very big rally to the upside.
Is there an ETF for battery metals, things like zinc, lead, and cobalt?
There probably is. There's an ETF for pretty much everything now. There is one for lithium. It's called it actually is the lithium and battery tech ETF. Yeah. So that is probably what you're potentially thinking of. And it has come to life in the last in March. It came to life. It's pulled back pretty sharply in the last couple trading days, but it is kind of starting to come back to life. We've had subscribers wanting to follow that because the chart has been showing through February and March that it was trying to put in a bottom, and it looks like it may have put in a bottom, and now it's trying to rally. But really, what all these sectors are going to do is going to hinge on what the broad stock market does. If the S&P 500 and Nasdaq roll over here and keep going lower, all these sectors are pretty much going to go down. There will be the odd one that bucks the trend, which will probably be a commodity-based sector, which could be the energy sector stocks, could be the miners, things like that. But we really need to follow the broad market because if money is naturally flowing out of the market, it pulls most stocks down other than the odd high flyer that can buck the trend that's based on commodities which aren't directly linked to the stock market.
The yield curve has inverted where long-term interest rates are higher than short-term rates, and the experts tell us 9 out of 10 times that signals a possible recession.
Yeah, I feel like there's a recession coming around the corner. The businesses are still booming. Everyone seems to be doing well. You can't hire anybody, so that says that, things are peachy. But all good things come to an end. And I feel like we've kind of pushed that limit. I think things are starting to stall out. It doesn't mean we're going to roll over right away. The economy takes a long time to top out. It can take quarters. So I think this is going to be a turning point this year. We'll see where the market ends on the year, but I do think things are slowing down, and we're going to start to see, harder for people to get jobs. I think that people will start getting laid off, and things will go into a recession phase, and a lot of it's going to have to do with high commodity pricing. The cost of living is just jumped so fast. It really is mind-blowing and shocking, especially if anyone's on a fixed income. It's a direct hit and a change of lifestyle going forward.
Dr. Copper, what's it telling us?
Yeah, well, copper is generally a good indication of what's going on with the economy, but it's tough because we are in a commodity super cycle. We haven't been in one really since back in 2001, 2002 is when the last really big cycle kind of started. And we've got this war adding some extra upside movement to these commodities, but copper's been holding up fairly well. Now, it is trading at a pretty major resistance level that it has hit It's now hitting for the fourth time, and each time it gets here, we see it sell back down. So it's going to be interesting because copper is a good indication of what the economy is doing. And a big user of copper is in building, home materials. And what's interesting is in the last 90 days, we've seen mortgage rates jump. The biggest they've jumped in a 90-day window since 1987. And if you were to look at like home builder ETF, one of those is XHB. I mean, it just has been in a downtrend. It's in free fall mode, making multi-month lows here, almost a year low. It's telling us that now that rates are moving up, homes are coming to a grinding halt. The cost to build and sell a house now is so high, and now rates are going up that they're not that affordable. And copper's used pretty big there. So I do feel like the economy's got all kinds of signs that we could roll over. And if copper tops out here, that is going to be a very bearish sign for the economy. So we'll have to see how that goes. It is at resistance. It hasn't broken out really and confirmed a breakout yet. So it is interesting to watch the copper market to see what it does.
Yes, and as people try to swing to electric cars, there's 300 pounds of copper in the typical electric vehicle because, it's just nothing but big electric motors, and they need wound copper wire to drive those motors. So that once the EV thing really starts to roll, you're going to probably see copper prices really take off.
Yeah, the whole electric, like you look at the cost price for fuel right now, and then you think of the electric and how much more affordable it looks. It starts to look real attractive real quick. It's like, wow, I don't have to pay $200 to fill my truck up. I could just plug it in and go for a drive. And especially if you've got some solar system that, takes some of the load or charges. I mean, this clean energy starts to look real attractive. The EV market, which would obviously drive up the lithium ETF, LIT is the symbol, and copper.
Yes, and what governments aren't telling you is that as people switch to electronic vehicles, there's going to be mobility pricing. You're going to be asked to take a picture of your odometer at the start of the year and then send in another picture at the end of it. And then you're going to be charged, 15 cents per kilometer because governments right now rely on gasoline tax revenue to help pay for roads, bridges, and other things. And so as that revenue starts to dry up, they're going to look for new sources. And of course, the drivers will be found out. So enjoy your cheap electric cars now because, mobility pricing is coming. Nobody's talking about it. But actually, in the greater Vancouver area, they were talking about it in the 90s to charge you per kilometer traveled to pay for roads and transit and so on. So right now, it's all through gasoline taxes. But just wait. If you want to, mark my words, as some people say, it's coming, folks. The government's not talking about it. But famously here, Barry Penner, BC Liberal finance minister, said just before an election, I asked him, are you going to bring in the harmonized sales tax? And he said, it's not on our radar set. 3 months later, they're elected. They impose the harmonized sales tax. And next time I bumped into him, I said, your radar set just doesn't work very well, does it? And it took them a year, and the people of BC, they held a referendum, and which is a very hard thing to do. And they recalled the tax. It only took the government 3 months to implement it, but it took them a year and a half to remove it. Governments, they're very reluctant to remove a tax once they put it in. Remember, Canadian income tax was a temporary measure that was brought in 1917 on the wealthiest 5% to help pay for the First World War. Chris, we're still paying for it.
Yeah.
Apparently. Chris, thank you so much for chatting with us.
Yeah, thanks for having me on the show, Jim.
My guest has been Chris Vermeulen from the Technical Traders. You can find him online at thetechnicaltraders.com. If you have any questions for Chris or any of our other guests, you can send them to info@housestreet.com. We'll ask that question for you. Find us on Twitter at House Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of How Street Media Incorporated.